Hello my dear traders. Before we dive deeper into the market, please subscribe my YouTube channel. Right now we are 800 plus subscribers. Let's push up to 1000 subscribers by the end of this month, okay? Do you know why are you still losing the money? It's not because you don't know how to trade, but because of these indicators. If you have these indicators, remove right now and let me explain to you how smart money concept work. Because today I will talk about market structure, I will talk about inducement and also liquidity, how to enter to the market and how to exit out of the market. Please watch this video up to the end. My friends, as you can see here, we have this chart, okay? This is just example of a chart, and overall the market is moving down, okay? And also I'll explain to you two types of liquidity. We have buy side liquidity and we have sell side liquidity, but for today I will talk about buy side liquidity, okay? I'll explain two types of buy side liquidity, okay, where the market will save liquidity, okay? As you can see here, overall the price is moving down, okay? It moved down, pull back, break equal low, move down again, pull back, and again break equal low. So what are you expecting? Most traders, they're expecting institutional to push this price to come to this zone, okay? When price reach this zone, some traders, what they will do, without any confirmation, they will enter their short from somewhere there, and let's say they will target equal low, and then they will put their stop losses above their zone. But sometimes what the market will do, remember, as I told you, market is always right, okay? So what the market sometimes will do, market will make this person happy a little bit, but later it will move up, sweep this person 80, and then this guy, he will start wondering, where am I get wrong? My brother, this is called inducement, okay? This is just a trap. Institutional are trying to pull you out of the market. They are trying to grab your stop loss, to grab your money, if you don't understand the meaning of inducement. Okay, inducement, this is like a trap, as I told you, okay? Institutions are trying to trap you, okay? This is just a temptation in the market, okay? Market, instead of respecting your first zone, it will respect the second zone, okay? So you need to take care about inducement, okay? As you can see, you enter from somewhere there, put your stop loss above your entry, and then you can also target somewhere there, or even down there, or even at that zone, okay? That's how I myself trade, okay? Since you have already understood about inducement, let me explain to you buy side liquidity. Let me explain to you briefly the meaning of liquidity, okay? Liquidity is like a fuel to the market. For example, we as a human beings, we can't survive without water, and remember, car can't move without a fuel, okay? Car must have a fuel so that it can move, okay? And this liquidity is a fuel to the market, okay? As you can see, let's look at this person A. As you can see, this person A, he mark well demand zone, and then there's a breakout structure down here, as you can see. So institutional will push this price up, already push this price up, okay? After institutional push this price up, this person, he started entering without any confirmation, okay? Let's say he entered from somewhere there, and then he placed stop loss above his zone, and then let's say we'll put TP down there, okay? So what will happen sometime, institutional will make this person happy, but later the price will move up, sweep this person liquidity, and then later smash this person a TP, okay? So this person, he was not patient, okay? He entered market without any confirmation, okay? Remember what I told you, above every equal high and every equal low, price must sweep liquidity, okay? So this is area where institutional will sweep liquidity, okay? So you need to be patient, okay? You need to wait institutional to grab liquidity, then you enter your entry, okay? So let's look this person B, okay? So as you can see here, this person B, he mark well this zone, okay? And then there's a breakout structure. Obvious, it will aid institutional to push this price up here, okay? So what will happen sometime, this price will move up, okay? What will happen sometime, this price will move up, okay, a little bit, pull back, okay, and again move up, sweep more liquidity, and again let's stop there, okay? So this person, he was waiting price to sweep liquidity above this equal high, okay? So let's say this person, his entry is above here, okay? Let's say he target to enter entry from above there, and then target down there. But market sometimes will not respect that. It will continue moving down, okay? And then this person is started wondering, where am I get wrong? I'm waiting price to sweep liquidity above this equal high without knowing that there's another equal high here, okay? Price has already formed another equal high, so you need to wait price to sweep liquidity above there, okay? After price sweep liquidity above that equal high, then you should enter his entry, let's say from somewhere there, okay? Yeah, then you should put stop loss above here, okay? That's how sometimes market work, okay? So remember, above every equal high, price must sweep liquidity. Above every equal low, price must sweep liquidity. So let's look at GU. As you can see, guys, these are British pound versus US dollar. The market overall is moving upward, okay? So as you can see, the market break here, break equal high, okay? And again, the market right now is moving down, okay? So what happens sometimes, the market will never move just one direction. What the market will do, the market will move up, pull down, move up, pull down, move up, pull down. The market will do like this, okay? It will never move just in one direction. Remember, higher time frame give us the market direction, while in lower time frame give us the entry, okay? So if you can see here, there's a market shift, okay? First, let's mark point of interest, okay? So there's a demand zone down here. As you can see, my friends, there's a demand zone down here. So I'm expecting maybe in future institutional to push this price to move down to come to this demand zone, okay? That's my expectation, okay? So as you can see here, again, market has already shifted. These are higher low, okay? Market has already shifted this higher low. As you can see, there's a change of character. There's a change of character, as you can see, break of structure. And again, above here we have a supply zone, okay? The market reacted from this supply zone. So let's move to a lower time frame. And also, before we move to first time frame, above there we have another supply zone, as you can see, okay? So I also expecting institutional to push this price to move upward, okay? So let's move to 4 hours time frame. Let's see how it's doing, okay? Before we dive into 4 hours time frame, as you can see again here, we have an order block, okay? So market has already moved to this order block. So next, what we're expecting institutional to push at least this price to come to this demand zone. As you can see down here, we have another demand zone, okay? So let's move to 4 hours time frame. Let's see how the market is doing. Nice one. As you can see, these are order blocks, so I mean a demand zone. So let me mark like this one, okay? As you can see, this order block has already used because price has already mitigated this order block. It's move up, then move down, then started moving up, okay? So for me, it might not work, okay? So let's mark another demand zone down here. I can see there's another demand zone, okay? So this is another demand zone, as you can see, guys, okay? So this demand zone still market did not mitigate it, okay? It's unmitigated demand zone. So I'm expecting institutional to push price to move down here, okay? That's my expectation, okay? And again, we have another also demand zone down here. As you can see, there's another demand zone here, okay? Still it's unmitigated. So what we are expecting now, we're expecting a liquidity, okay, below this equal low, okay? Remember, this will be our equal low. So below this equal low, we're expecting institutional at least to push this price down here to grab more liquidity before it move up, okay? So expecting liquidity below this equal low. And then let's mark well, this is our zone, okay? I'm sorry. So let's mark this order block well. As you can see, price has already move up and swept more liquidity above here. As you can see, guys, okay? Price has already swept liquidity above here. So what is the next? So let's move to 15 minutes time frame and let's look at entry, okay? Let's look our entry on 15 minutes time frame, okay? So let's move to 15 minutes time frame. Remember, 15 minutes time frame, as I told you, it gives us the entry, okay? When higher time frame, it gives us the market direction, okay? Nice one. So as you can see here, these are 15 minutes, and above here we have a zone, okay? Price has already swept liquidity above here. If you can see, first price are consolidated. This is our zone. Move down, pull back, and again move down. So this is area where institutional grab liquidity, okay? So let me mark for you well. As you can see, there's a liquidity there. Okay, there's a liquidity there. So what we're expecting right now, we're expecting at least institutional to push this price to move down. I'm sorry guys. So this is where institutional push grab liquidity, as you can see guys. So what is next? I'm expecting at least let me zoom for you. As you can see here, the market has already break higher low. As you can see here, the market has already break higher low. Okay, it has already break this higher low. So I'm expecting institutional to push this price to come to this zone. Can you see there's another zone here? Okay, there's another zone here. So I'm expecting institutional to push this price to come to this zone, and then we enter our entry from this zone. Let me change color so that you can see well. Okay, nice one. So this will be my expectation from tomorrow on Monday. I will short from somewhere here. Okay, and then I'll put my stop loss, let's say above there. And then what will be my next entry? Okay, my next TP, I mean, okay, exit. Okay, so my TP, it will be somewhere here. Okay, I'll target somewhere there, as you can see. So I'm expecting at least institutional to push this price to move up to this area. Okay, so sometimes what the institutional do, sometimes they will not respect our expectation. Okay, instead of market to pull back, sometimes institutional will push this price to move down. Okay, so I wish we entered from somewhere here, because as you can see, after price replicate it pulled back to this point, this area. I wish we entered from here. Since we missed the entry, we need to be patient, and on Monday we'll enter our entry from somewhere there. If it will not respect, it's okay, well and fine. As you can see here guys, this is example of my journal. Okay, this was August date 25. It was on Monday. I did not took any trade. Okay, on Tuesday, as you can see, 26, I took a GJ short 3k. Okay, on Wednesday, EURUSD long 2.5k. Also on Thursday, long 2.8k. But on Friday, I lose. Okay, so I lose 800. Again on September this month. Okay, date 1 on Monday, I took trade on EURUSD. It was 2.2k. And then on Tuesday, GU, I lose this trade. Okay, 1.5k. And then GJ, I took on Wednesday 2k. It was a long, as you can see. Then on Thursday, GJ again, it was a long. Finally on Friday, I took trade on GU and gold during MFP news, and then I won 8.9k. Guys, as a trader, you need to journal your trades. Okay, yeah, so this example of my trade, and tomorrow on Monday date 8, I'm expecting to trade again. I will continue journaling. Okay, if you want to be a consistent profitable, you need to journal your trade. Okay.